After strong earnings for US banks a few weeks ago, investors will be keen to see whether the UK Big Four banks are able to replicate the trend. Barclays is due to report on Thursday the 18th of February, NatWest on Friday the 19th of February, HSBC next week on Tuesday the 23rd of February, and Lloyds on the 24th. Now, between Brexit and COVID, banks have underperformed the broader market. Bad loan provisions, however, eased significantly in the third quarter. However, there are concerns that with additional lockdowns in Q4 and the current quarter, banks still need to tread carefully. Investors will also be watching out for dividend news after the regulator lifted the temporary ban imposed last March. And more recently, it's been very much the Bank of England has been in focus for the sector. Whilst the central bank has embraced negative interest rates, it's unlikely to implement them anytime soon, which will offer some relief to the banks, although net interest income remains pressurised. Just looking at the chart here, we're looking at Barclays. Now, Barclays has been consolidating. We can see here really since around mid-November, and this is a trend which is common across all the banks. Now, the RSI had until today been set around this 50 level, suggesting that there was sort of a neutral bias, but today we've seen this 5% jump in the banks, or in Barclays specifically, but also in the broader banks, on the back of sort of this vaccine-led optimism. And that has just taken the RSI into bullish territory around 60, still some distance from the overbought area of 70. And as we can see here on the chart, that's just taking Barclays towards the upper end of the horizontal channel. What we'd be looking for really is a post-earnings breakout above that 60 level, if we've got some good news coming. On the other hand, if there are some disappointing numbers, investors might want to be looking for a break below the 130 level before putting any bearish bets on Barclays.